Hey everybody, this is Ryan Mallory with Stock Market Crash Update number 10. We have the S&P 500 down, the Dow down, the Nasdaq, it was down, but interesting enough, the Russell was higher this week, and it was substantially higher. Even more interesting was last week, the Russell was down. That was your small caps. But the S&P 500 was up, the Nasdaq and the Dow were up. So you got a little bit of a divergence there where when the small caps falter, the large caps rally, and when the large caps falter, the small caps rally. While we feel like we're still in the midst of a pretty good solid market rally right now, are we really moving? Not really, because over the last 2 weeks, we've done nothing. The last 11 days, the S&P 500 really hasn't moved. Starting here back on April 9th, it hasn't gone anywhere. We almost had a breakdown earlier this week on Tuesday, but it got quickly snapped up, and that's what's happening. Every time we have a little bit of market weakness, you just see this huge bid just come right underneath the falling prices and prop the market right back up. You're also in a situation right now too where there's a major war going on in the stock market. You have a super weak market versus unlimited Fed stimulus. Which one's going to win out? In the past, it's always been the Fed. But the Fed has never faced issues like this. They've never dealt with 20+% unemployment. In 2008, the worst they got was about 10%. We're double that, and we still haven't seen the top of this unemployment number yet. Good chance it goes up to 30%. And you want to talk about something really crazy? What's going to happen if the stock market goes back to all-time highs and we got 30% unemployment? You got the big companies getting bailed out. Small businesses are being forced to shut down. You're going to have some civil unrest on your hands. You're going to have a populist movement like the world has never seen before. So I still think that it's very unlikely we go straight back to all-time highs. I still think that we're going to see a very large correction here coming up. A lot of people are getting sucked into this market rally. They feel like they're missing out. You got your Robinhood traders and people who are trading for the first time getting sucked into this market thinking that it's just going to keep going up and up and up. And I feel for them because they're going to get destroyed. I really don't see a scenario where they nailed the bottom of this market. And so while it feels like the market has the worst behind it, the rally has lasted as long as the sell-off. And you're seeing a lot of people throw in the towel and say, okay, the worst is over. There's no more bear market. We're going back up to all-time highs. It's a very popular attitude right now. And I think it's a hugely misplaced. Now look, if I'm wrong, all right, I'm wrong. And I'll get on the right side of the trade and I'll profit from that as well. However, I don't think I am. So speaking of the consolidation over the last 11 trading sessions, let's look at it right here on the 30-minute chart. You're seeing a lot of dips and valleys on this chart. I mean, there's huge support here. You can draw a box and you can see exactly how contained this price action is. And then on Friday, of course, you had this monster rally off of the 11:30 lows. I've talked about it before. 11:30 Eastern usually coincides when Governor Cuomo is speaking and doing his press conference. The market just takes off. That's not traders, that's just algos. They're programmed to buy every time at 11:30. Now, eventually that's going to get broken. That's not going to work forever, okay? But until it does, I mean, that's what you're seeing here. You're seeing this 11:30 rally where it just goes straight up 9 straight green bars on the 30-minute chart. That is extremely hard to pull off. You're not even seeing that hardly anywhere during this market rally, but we did it on Friday. Even with that strength on Friday, did we actually improve our situation here on the 30-minute chart? No, we didn't improve it at all. It's still stuck in a sideways consolidation pattern, and when you zoom back far enough, it kind of looks like a topping pattern. It looks like the market is distributing here. The buyers and sellers pretty much even strength with each other, and it has nowhere to go. But eventually the bulls will either break it out or the bears will break it down, and you're going to have a new trend in place. But right now, this is not a trend. It's just sideways price action. I can't really do much with it. So what I'm doing in my own personal trading, I'm just kind of staying put. I'm sitting on my hands. I'm not going to force trades that aren't there. So this sideways price pattern, I kind of think it's the calm before the storm. I think it will go back down. I don't think that there's a lot of people that are positioning themselves for the downside because they feel like they're going to miss out on more upside. I think that downside is going to come. It's going to be a rug pull event, and it's going to take a lot of traders out. There is very little improvement in the situation in the economy right now. Jobs are still being lost. The Gilead drug trial did not go as well as they wanted it to, and that was actually leaked by accident. Cases are still spiking. So there's not a lot to be excited about with this market, with the economy. Oh, but it's all priced in. No, it's not. Was it priced in on February 19th when we were hitting all-time highs? Was the market already looking forward to this coronavirus event? No. It was looking forward to more and more all-time highs. So the market had it wrong on February 19th. I think it has it wrong here on April 25th. Now, with all that sideways consolidation, you could say, hey, this is a bull flag right here on the chart on the S&P 500 daily. And perhaps it is. And maybe if it breaks out and it can get out of this pattern, there still may be more upside to it. However, the bulls do have a little bit going for it here as it managed to break above the 50-day moving average after struggling with it the previous 5 trading sessions. It gapped above it. It gapped above the 5 and the 10-day moving averages as well. Those are all converging. They could act as some support underneath it going forward, but I don't think that will be the case because we've seen a lot of slicing through these moving averages. The one that's given the market the most problem has been the 50-day moving average. If the 50-day moving average was a problem for the market, it's going to even see even more resistance at the 200-day moving average if it gets that high. Going back to the 30-minute chart, you had the potential for a head and shoulders pattern. A head and shoulders pattern looks exactly what you'd think. Left shoulder, right shoulder, and a head in the middle. You got that right here. You got the left shoulder, you got the right shoulder, and then you got the head right in the middle. The head in the middle is usually higher than the two shoulders, and then you have a neckline that goes right across here. Okay, that's the level that the bears have to be looking at. If it breaks below that level, it's going to get ugly on the market next week. Going back to the daily chart, you can see that we did break down and out of that bearish wedge that I had talked about last week. Never a good pattern to see confirmed. Oftentimes it does mean that you're going to retest the previous lows. Quick look at the Nasdaq 100. Prior to this whole coronavirus sell-off, the Nasdaq 100 was a very, very strong index. It was the index that was leading the market higher. It also took a huge hit on the way down. But what's even also interesting is it's positive on the year. It's about a 0.5% positive. Even with the sell-off on Monday and Tuesday, it has managed to rally back and finish positive on the year to date. What's even more interesting, it's above its 50 and 200-day moving averages. But they also are all converging here together at about 8,200. So there's a good chance that you could see a retest of that support level in the coming weeks. Notice too, there's a bull flag pattern on there. It's at the very top of that bull flag pattern. So any strength next week, it's probably going to break higher. The one thing that you could see it do is make a huge rally and try to fill this gap all the way from February 24th, pretty much where the sell-off started. I don't know if that's really a possibility. I think that gap is going to stay unfilled for a long time. Most gaps do get filled, but sometimes it takes longer for one gap to get filled versus the other. Let's take a look at the VIX because this thing continues to melt away. It had one of its worst days on Friday since the market bottomed. And what is it trying to tell us? It's trying to tell us that price is trying to go back to more of a normal situation. Things are trying to return to normal. Does that always mean that it will? No, it doesn't. It doesn't mean that at all. But if the market rallies next week, you're probably going to see a move into the 20s for sure. That doesn't mean you go short the VIX. A lot of people have done that and they get destroyed for doing that. Okay, you can get a 40-50% pop overnight. That's just the kind of market that we're in. It's not worth the risk reward, especially when you don't know what kind of headlines that we might see at any day going forward here. Now, I mentioned earlier that the small caps were up on the week while the rest of the market was down. Small caps have lagged this entire market rally. Usually they're huge participants in a market bottom. This is not the case. On the Russell 2000 ETF, this thing was hovering around 168 before the sell-off. It went all the way down to 95. It's bounced considerably. Look how far off of those recent highs the Russell is. Now you take SPY, the S&P 500 ETF. It's a lot closer to getting back up to those highs than IWM. IWM is significantly lagging this market rally, and small caps are usually right there in the middle of it all. Take a look at Amazon. Guys, this thing is an animal of late. It broke above multi-year resistance. It's got a continuation triangle near the highs. Looks like it could even break out to even 2,700. Maybe it does. However, I'm not touching it. Guys, this thing is parabolic at this point. Wait for a pullback. If you're dead set on it, wait for a pullback to 2,200. That's what I would do at least. I think there's more risk to the downside at this point than to the upside. Take a look at Apple. This thing is $70 higher since the March 23rd bottom. It's rallying, not as strong as the other tech plays, but it's still very strong. And when it bounces, it takes the rest of the market with it. Look at Facebook. This one's going right back up. It was around 215 before the sell-off started. This is a $600 billion company that is only about 10% away from reaching its pre-corona price. Look at Microsoft. Does this thing even look like it's had a bad day yet? No, this thing's at 174. Right before the sell-off, this thing was trading at 188. Very close to getting right back up there. It was trading as high as 180 just a week ago. Why do I point all these out? I'm trying to show you how much of an impact just a handful of stocks is having on the overall market. Like I said earlier, you had this huge war brewing in the market, in the economy right now, where you have a dreadful economy squaring up against unlimited stimulus. We're bailing out bad companies, we're bailing out bad actors, we're giving not billions, we're giving trillions of dollars just away. We have algorithms that are buying every dip that there is. We bought the Monday and Tuesday dip with incredible enthusiasm. Where you should start to get nervous is if you start seeing the profit taking in those and they start leading back to the downside again. You got a little bit of that on Monday and Tuesday. Tech was very weak on those days. But once you start seeing people dumping those big names, it's going to drag the entire market down with it. Small caps, they're not keeping up. Yes, they were up this past week, but they're not keeping up with the overall market. And that's a huge issue because that means that fewer and fewer stocks are helping this market to go higher and higher and higher. That can't last forever. Eventually, the small caps will bring down the rest of the market too. I believe that the weakness in the small caps is a leading indicator of where this market ultimately wants to go. Now here's the thing, if I'm wrong, I'm wrong. Okay, nobody's right in the stock market all the time. This could be very well something I am just completely misjudging, okay? Hey, I'm putting my money where my mouth is, okay? I'm trading short. I'm not doing these videos to try to promote. I don't have that big of an influence on the market, okay? However, I'm putting it out there because I'm trying to help you guys. I want you guys to stay abreast. I hope for your sakes of your 401ks and IRAs and all that, I hope I'm wrong, because guess what? I can make the money back. Okay, any losses I take, I'll make it right back. I've been doing this for years. I know how to make money in the stock market. Okay, and I've been wrong plenty of times in the past. But the difference between me and a lot of people who blow up their account, I don't stay wrong. My ego gets checked at the door every day. If I'm wrong, I own up to it, I move on. However, I've done a lot of these sell-offs. I've done the 2008, I've done 2000, I've done 2011, 2015, 2018. I've seen tons of sell-offs, okay? There's one main ingredient in all of them, is there's always a dead cat bounce in them. This is your dead cat bounce. I'm pretty sure if it's not, then there's no reason to ever short the stock market ever again. Zero. If we can just go straight down and straight back up in the same amount of time, well, don't ever short stocks. Just go either cash or go long. I mean, that's really your only two choices. Because right now we've nationalized the financial system. We've created a horrible precedent for the future. If this thing comes back in the fall, what are we going to do? Throw another $10 trillion at the problem? Are we going to go bail out all of those companies then too? Yeah, probably so. Guys, once you do it once, it just keeps getting worse and worse and worse. It's like lying. You have to keep telling lies to cover the truth. The Fed has to keep spending money to hide the weakness that we're seeing in the broader economy here. So if I'm wrong on this and the market just keeps going back up to all-time highs, hey, going forward, it just made my trading world a whole lot easier. A whole lot easier. Please do me a huge favor, like and subscribe to this video. It means the world to me. I like all of the comments. Tell me below, what are you guys doing? Long, short? What stocks are you buying? I'm going to do my best like I do every week to answer all of your comments, and give me ideas, man. If you want me to focus on a new topic or a different aspect of trading, put it down there. I will tackle it as best as I can. Thank you. God bless.